Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, an exit interview. Gary Gensler is set to resign as SEC chair next week after an eventful tenure and much ado about crypto regulation.
These other thousands of projects need to show their use case and show that they actually have fundamentals underlying them, or they won't persist.
How Gensler views his own legacy at the SEC, including climate disclosures, Treasury's regulation, and, infamously, Bitcoin.
You love it. You don't like those other coins.
I've never owned any of these, and I've been consistent for 7 or 8 years.
Plus, the rest of today's news that got us squawking. European regulators eyeing big tech. China considering the sale of TikTok to, who else? Elon Musk.
What do we think as Americans that the Chinese would be willing to sell it to Elon Musk?
And Starbucks closing an open door policy.
There was the naked guy in the Starbucks right across the street here.
It's a naked guy this morning. What?
It's Tuesday, January 14th, 2025, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
All right, good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin.
And just in the last hour, Britain's competition regulator says it's opening a formal antitrust investigation into Google's search and search advertising services. The agency said it would assess whether Google has strategic market status. That's the term being used, which would give the regulator the power to impose changes to prevent what it would be deemed, I guess, anti-competitive behavior. And then also, the European Commission is reportedly reassessing its probes into Apple, Meta, and Alphabet linked to its 2024 Digital Markets Act. And according to the FT, the review could lead to a reduction in the range of investigations. It said all potential fines will be paused during that review, and the companies have asked the incoming Trump administration to intervene in what they characterize as overzealous regulations.
I mean, those are pretty big, important stories in the world of business and beyond. When you watch what the big U.S. tech companies are asking the Trump administration to do and what they might get as a result of that, to have the Trump administration standing up for their rights overseas, also to see what's happening with the potential ceasefire in Israel-Hamas. These are some significant changes that are happening all around Inauguration Day that's coming up next week.
Seems like it might not be a coinky-dink.
Yeah, probably not. Probably not.
Meantime, members of President-elect Trump's economic team have been discussing a slow ramp-up to tariffs month by month. It's according to a Bloomberg report that said that the gradual approach would be aimed at boosting negotiating leverage while trying to avoid a spike in inflation. The report said that the plan relies on executive authority under the International Emergency Economic Powers Act. Now, it would increase tariffs by about 2 to 5% per month. The report said the proposal is in the early stages, has not yet been presented to Trump. Those working on the plan include Scott Bessent and Kevin Hassett, as well as Stephen Moran and Trump's pick for Treasury. Of course, those are the National Economic Council and the Council of Economic Advisors. So
it's kind of interesting, is it not?
You got to come up with
a gradual boil?
Yeah, it's the negotiating. And I think it also highlights that there might be some inflation, the possibility
I think that's
of
the
some
bigger
inflation.
issue.
We'll see today.
I think they're probably
what
worried
comes
about
today?
the inflation. PPI is today. And
producer price?
Producer prices, and that
PP?
has some key components that play into the PCE, which is one of the Fed's favorite numbers.
And then CPI tomorrow?
Tomorrow we get CPI. We'll see what holds with some of these, but the expectation, at least for PPI today, is that the deflationary indications we've seen to this point might come to an end, or that you might even see some gradual.
But a lot of it is because of exogenous hurricane, storm, weather.
Some of it, you also have healthcare prices that might continue to climb.
There'll be a way to say
not to reset.
There'll be a way to say not to worry, but people will still worry.
The markets will worry, for sure.
If it's hot. Chinese officials are evaluating potential options for TikTok, including the possibility of a sale of the U.S. operations to Elon Musk. If he can afford it, probably. That's according to multiple reports that say Beijing strongly prefers that TikTok remain under the ownership of ByteDance, it's the parent company, and is contesting the impending ban with an appeal to the Supreme Court, the U.S. Supreme Court, but government officials are considering contingency plans if the Supreme Court does uphold the ban. Reports say it's not clear how much ByteDance knows about the government discussions and whether TikTok and Musk have actually been involved or whether it's just like, I don't know, fantasy. In a statement, TikTok spokesperson tells CNBC, in their words, "We can't be expected to comment on pure fiction."
I've made a lot of calls last night. Mm-hmm. I don't believe the folks at ByteDance have been. I don't think this has anything to do with them, and I don't even believe necessarily that the Chinese officials who might have floated this have floated it all the way to the top of the government.
Oh, okay.
I think there are people inside the Chinese government who are thinking, okay, well, if this happens, do we do this? Do we do that? I don't know where we really are. I don't think we're anywhere in this in a meaningful way, in that there are any kind of negotiations going on or anything like that. I mean, I think part of this whole thing has been for them to say, we are not negotiating, there is no negotiation, and that they want to actually effectively force the issue. Now the issue has been forced, but if they can somehow get past, technically, the inauguration, then they think that there's an opportunity. And interesting,
I don't know if that's the case, though, because...
But interesting, as we've discussed, this, and as my children will tell you, Dad, the service is still going to work.
Right.
On the 21st, the 22nd, the 23rd, the 24th.
It will just gradually decline.
It'll just gradually decline. So you actually have more time than you think. The idea that somehow this whole thing sort of comes to a screeching halt on the 19th is not really...
Think it's ever going.
The thing that is an issue, though, is if it works less and less, you're degrading the value of the property over time.
No. I think you have when I say you time, you have a couple of weeks,
right,
maybe a month, to figure it out. And so my only point is it's still on the table in that way. Then the second question, which I think is maybe more meaningful this morning, is to the extent they are going to sell the company, what do we think as Americans about the idea that the Chinese would be willing to sell it to Elon Musk? And what do we think as Americans that then Elon Musk is as close as he is to President Trump? Think about all of this just for a second, meaning they are not prepared to sell this business to just about anybody else in the world. Why would they be prepared to sell it to Elon Musk? Because he has an enormous business in China
that they have influence over.
That they have influence over and that they feel they have leverage over.
Yeah.
Think about that in the context of somebody who has been described, and I'm not saying this is a bad thing or a good thing, I'm just saying this is what it is. People describe him also as the co-president of the United States. So when people think about national security issues and they think about leverage and they think about influence, there's a lot of
But you all along you haven't really believed in any of the conspiracy theories about TikTok in the first place. I mean, Kevin O'Leary, is he going to get it? I think we need to hear back from the other sharks at this point. I don't know what Barbara Corcoran is thinking. I don't know whether they're all. Who's the other guy? I can't even say his name. He's.
None of those people on the list.
He's shilling for private jets. I see a lot. I don't know who Lori Griner is.
Oh, Robert Herjavec.
Damon John. So the other sharks haven't come back, I don't think. Is Cuban still...
He's not a shark anymore.
He's hiding somewhere.
But there have been other serious offers that have come through from the former Treasury Secretary of the United States.
And if you go back even farther, the whole idea of Walmart wanting this business and Oracle,
Amazon.
Yeah. Now, those to me would be more realistic and make a lot more sense. However, they make no sense if you are the Chinese government.
Yeah, I don't know what kind of leverage the Chinese government will have. And by the way, it doesn't necessarily matter who's president of the United States because this was a law that was passed by Congress. The Supreme Court can overturn Congress. A new administration cannot. So I don't know what kind of negotiating power there will be. This is a deal that was laid by Congress. Yeah. And we had Bradley Tusk on this week who made some very interesting points about how the Supreme Court has upheld Congress's decision in a lot of recent cases that have come through on this. He said to the Chinese government, you might see them more willing to cut a deal because even the Chinese government doesn't want to lose out on billions of dollars in a sale that would come with something like this, too.
I don't know. I don't immediately see all the tin hat aspects of Musk owning it. I look at the way he's operated Twitter, and I mean, I think it's Not great for legacy media, but it's...
But one issue you might have is just concentration of media in new media, because you would not see multiple networks owned
concentrated in users' hands, which isn't nearly...
It isn't. The algorithm is controlled by whoever's running the company. And you could set the algorithms up to be fairly powerful. You would not see two networks owned by the same entity. It wouldn't be allowed.
Right, but it's all user-generated content.
Right, but you tell me, would Facebook be allowed to buy TikTok?
Facebook they were asking me down.
Facebook.
I've never been on Facebook.
Well, I mean, I would think
about Facebook. I've never been on Instagram. They were saying in makeup, Instagram.
I think right now you should be loving Mark Zuckerberg.
Well, you know I love him.
That's my point. Then
I think it's cool when he's on the surfboards. I like his new hairstyle.
No, I'm asking you a different question.
Which matches his politics, his new ones. I don't know, Andrew. You're so worried about everything. Elon Musk, don't worry about TikTok. The Chinese aren't coming over. I don't even think Trump's colluding with the Russians anymore. I don't even think that's happening.
Anymore?
yeah, exactly.
Tease will be next.
Next on Squawk Pod, an exit interview with SEC Chair Gary Gensler. He hands the reins to successor on Inauguration Day, but before that, he reflects on his tenure at the SEC, his very visible work on regulating crypto, and the legacy he's leaving in less controversial markets like treasuries and equities.
That market is so much more critical to you and the American public than crypto, the $60 trillion equity markets. And we have put in fundamental reforms.
This is Squawk Pod from CNBC, bringing you the best of the morning show Squawk Box in podcast form every day with Joe Kernen, Becky Quick, and Andrew Ross Sorkin.
It's called the incompleteness theorem in mathematics, which shows a system cannot actually prove its own consistency or look at itself. It's hard for individuals to look at themselves, don't you think? Introspective.
I try all the time.
Do you?
And it hurts, but I do.
There are times you write down improvements, things like that?
I look at myself in the mirror. No, I don't.
Yeah, is it Kant or Kant? Let's not even go there. Do you know?
I'm pretty sure it's Kant.
Okay.
You're not going to get me to say
no, I know.
otherwise.
I know.
You are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernen.
I'm here.
And Andrew Ross Sorkin.
Thinking about introspection now.
Thinking about all kinds of words and how to say them carefully.
Hey now.
Speaking of self-reflection, that's what this next interview is partially about. It's Gary Gensler's exit interview from the SEC. He's been a very visible regulator since he took office in 2021, at first because of the meme stock mania and GameStop short squeeze drama that year, but then because of the memes of Gensler himself, popularized by the crypto community. The agency's efforts to regulate cryptocurrency under his leadership sparked a lot of backlash. The SEC suing Binance and Coinbase, for example, only fueled more animosity for Gensler, at least among those crypto bulls. It got so heated, Donald Trump turned it into part of his presidential campaign. One of the promises he ran on was firing Gensler on day one of his term. Now, technically, Trump might not have had the oversight to do that, but he ended up not having to. Though Gensler's SEC tenure could run to 2026, like many SEC chairs before him, he announced his resignation effective on Inauguration Day. President-elect Trump's pick for his replacement, Sean Atkins, a very pro-crypto choice. Let's get back to Joe, Becky, and Andrew.
Let's talk with Gary Gensler on his exit interview. The SEC leadership still making headlines with just 4 days left before President-elect Donald Trump taking office. The current SEC chair, Gary Gensler, stepping down. Yesterday, two Robinhood broker-dealers agreed to pay $45 million to settle SEC charges that they violated more than 10 security law provisions related to brokerage operations. We're going to talk about that and so much more. Joining us right now is SEC Chair Gary Gensler in his exit interview. Gary, thank you so much for joining us, and thank you for talking with us throughout your time in office. There's about 100 questions that I have on my list. But I want to start with one that I think actually may be, in a way, the hardest. And I think it's a political question, but it's also a philosophical question, which is when you look back at the work that you did over the last 4 years, and you also look at this election, specifically this election, and you look at the number of folks in the crypto world who ultimately turned out, not just turned out for President-elect Trump, but turned out for President-elect Trump with money, with dollars, the huge amount of money that went into effectively his campaign as, to some degree, a rebuke of what was happening with your efforts to block some of the things that they were doing. I'm so curious how you personally think about that today.
First, Andrew, Joe, Becky, so good to be with you, and thank you for inviting me. Look, I think I believe deeply in our great democracy. I think that this election, though, as you point out, there was money raised from the crypto field. I don't think that's what this election was about. This field, the crypto field, a highly speculative field, has not been compliant with various laws, whether it's anti-money laundering laws, sanctions laws, or in our case, securities laws. Now, Bitcoin's not a security, but these 10 or 15,000 other tokens, the investing public has been hurt over the many years. My predecessor, Jay Clayton, who's going to serve again in the Trump administration, but Jay Clayton had brought about 80 cases. We're a law enforcement agency. That's what we've continued to do to protect the investing public so they get disclosure, they're protected against fraud, manipulation, and there's just been too much of that in this field. Right. And then, of course, to address conflicts when you had these crypto exchanges not only operating as exchanges, but also trading against their customers and on and on.
Gary, I think the question, though, is, some critics have said that the SEC has pursued a policy that has been focused more on litigation, if you will, or rules by way of litigation than actual law. That perhaps there should have been a greater effort put on creating real laws, not just guidelines, which then created this litigation. I'm looking, by the way, at even what just took place in the last, 48 hours from this court as it relates to the Coinbase case, where they're asking the SEC now, effectively you, to, quote, explain yourself as it relates to some of the things that are being done. And by the way, the judge in the case said to the SEC, quote, it should not give yet another poor explanation in an already long line of them. And so I know it's a hard question, but I put it to you because I think that the public is trying to understand the way you've thought about it thus far.
Look, I thought about it that we have laws. Congress has passed those laws. Of course, they can change them. But a sector of this field, crypto, the investing public is investing based on projects and these things without prejudging any one of them. Many of them are under the securities laws. And in that field, there's a lot of non-compliance. Look, Andrew, in most of what you talk about on any given day, you talk about the fundamentals of a stock or a bond or the markets, the valuations of mixed fundamentals and momentum or sentiment. And this crypto field seems to trade mostly on sentiment and much less on fundamentals. But if the fundamentals are there, and I say if, then make the proper disclosures under the securities laws. That's the basic bargain.
I was glad to have you coming on today, Chair Gensler, and I was thinking of just an overriding question about Bitcoin and what we've seen for the past 4 years under your tenure. And I can only come up really with two scenarios, and neither one of them are great. The first one is that under your leadership, it was, really dragged kicking and screaming into where we are today, and it's a far cry from 4 years ago. You'd have to admit it, with ETFs and adoption by so many different firms. It's almost like there were so many obstacles put up it made it very hard for what could be a transformative new asset or industry. So that's on the one hand that you did. Or on the other hand, it should have been very closely scrutinized. And at $95,000, if this is ephemeral and built on air and a Beanie Baby, there's going to be an absolute bloodbath. So either you stood in the way of a totally new industry, or you were unable to prevent a huge bubble from forming, which is going to end very badly. And neither one is going to be much of a legacy to look back on.
Joe, I know from our conversations in the past, you view Bitcoin very differently than these 10 or 15,000 other tokens.
But it was hard for Bitcoin under you, though, under your regime. It's very difficult for anything good to happen for Bitcoin.
Joe, within the first few months in the job, we had Bitcoin exchange-traded funds based on futures. But also, you recall when I was coming into this role, the whole GameStop events. Mm-hmm. And that market is so much more critical to you and the American public than crypto. The $60 trillion equity markets. And we have put in fundamental reforms, not only shortening the settlement cycle where you can get your money in 1 day rather than 2 days if you're an everyday investor, but that actually the markets will be more efficient. We addressed ourselves to the second most important market, I would say, the U.S. Treasury market that had had jitters for so long, a $28 trillion market, and fundamental important reforms. We addressed ourselves to corporate governance, that an insider no longer can file a plan on a Monday the same time they have insider information and sell their stock on a Tuesday. They'll now have to wait 3 months. So I'm very proud of the record and this focus that you all have had on crypto. I understand it brings in eyeballs, it sells newspapers and so forth, but the capital markets at $120 trillion, I'm very proud of our record.
Gary, let me go to a different topic. We're going to move way off of crypto, but another topic that has frankly become quite controversial, which is both climate rules, which are now in litigation that you put forward. And then there were efforts early on that I think effectively either were abandoned or you tell me around ESG rules, boosting board diversity, for example. There were some workforce management issues and other things. And the whole country or world seems to have shifted in some way. You may not agree with the way it has shifted, but I, again, wonder how you think about this election, what you think's happened even in this country. Almost every single day, there is another Fortune 500 company coming out with announcements that they're abandoning DEI programs. They're abandoning ESG programs. They're abandoning a lot of the things that were being talked about by this administration and by the SEC as it related to rules and other things that they were trying to put forward.
Andrew, as a securities regulator, I'm neutral to just about all that you just said. We're not a climate regulator and we're not a workforce regulator. We're a securities regulator. But when I came into the role, we had found that of the top 1,000 companies listed on the exchanges, a majority were making disclosures about their climate risks. And investors were telling us that they found those disclosures inconsistent but material to their investment decisions. So we grounded in materiality. We went out, we heard the public, we got tens of thousands of comments, lots of investors who wanted this information to be more consistent and just based on material information. And I've been consistent since my confirmation that we would ground it in just what's material to investors. As you might recall, the back and forth, right. Yes, some advocates wanted more, but we're just a securities regulator, and I believe that we rightly just try to bring
Gary,
consistency.
Even if we could stipulate that it was for disclosure purposes, I'm curious, just on a very personal level, what now that you're taking off and leaving the role, what you make of this reversal as it relates to ESG and DEI and so many of these other things that had become almost a staple of corporate America over the last 4, 5, 6, 7 years that was developing.
Well, I know in just managing the SEC's 5,000 people, we benefit from recruiting and giving opportunities to the diverse population we have in America, 330 million people, regardless of gender, race, or background, or orientation. That helps our agency. But in terms of a securities regulator, really, investors have to decide what's relevant. We did not put forward, we at the SEC under my leadership didn't put forward any disclosure rules around workforce or diversity. We did come in and do something around climate because the markets were already having those disclosures. What I do think is the markets will figure out, the investors will figure out whether the climate disclosure is relevant and material to their investment decisions.
But is it material? It was material a couple of years ago, and it's not now. I don't understand the materiality of it, and whether some investors decide that or whether it's just very gray.
I think, Becky, you're right that things can change. 20 and 30 years ago, companies did not make disclosures about cyber risk. They didn't make disclosures around climate risk. I came into the role and found many investors wanted and demanded that type of disclosure. And so we took those two projects up. What might be the case 5 or 15 years from now could shift as well. And I think our great agency is just about bringing some consistency and truthfulness, that people don't lie. Think about artificial intelligence right now. Many companies are sort of puffing themselves up and promoting that. It's important that they not, let's say, call it AI wash, that they're truthful in what they say.
Gary, earlier, just to return, just what I understand completely, what you think is going to happen, or whether your thinking has evolved, it almost sounded like you wanted to separate Bitcoin from the rest of the industry. And I'm wondering whether you're actually warming to the idea of at least Bitcoin, and whether again people are tweeting you that I said you either stood in the way of an extraordinary industry or were utterly unable to prevent a massive bubble. What do you think the future holds? Do you have a feeling on which it is? Do you think Bitcoin has inherent value and is a store of value? Or do you feel that when we look back on it 10, 15, 20 years from now, it's going to be something from the 18th century with tulips?
Joe, it's hard to predict. I think I really do, like you, because I know that you think, I'm going to out you, think negatively on many of these altcoins, you, Joe. But
right.
in terms of Bitcoin, we at the SEC have never said it's a security.
Well,
I have not.
What do you think? You taught at MIT. I think you know. You got to have some kind of feeling. You've read the books, Bitcoin Standard.
Yeah. I think that Bitcoin is a highly speculative, volatile asset, but with 7 billion people around the globe. 7 billion people want to trade it, just like we do have gold for 10,000 years. We have Bitcoin. It might be something else in the future as well.
Right.
These other thousands of projects need to show their use case and show that they actually have fundamentals underlying them, or they won't persist, Joe.
Oh, my God, you own Bitcoin.
That's where the public...
You must own Bitcoin.
Why the public
you must
needs
own it
disclosure.
now. That's what it's.
You
love it.
I've never owned.
You love it. You don't like those other coins.
I've never owned any of these, and I've been consistent for 7 or 8 years on this.
Well, now you can't, because you won't be a SEC chair anymore.
Hey, Gary, different lane. One of the other new features of the market, or a market, is this idea of prediction markets. We just had the CEO of Kalshi on the broadcast yesterday. He has brought onto his business as an advisor Donald Trump Jr. I'm curious what you think of prediction markets, and I'm actually very curious specifically what do you think of Kalshi's decision to hire the son of the president-elect?
I have no views on who somebody hires, but capital markets themselves, our great, vast $120 trillion capital markets, whether it's stocks, whether it's bonds, whether ultimately it's prediction markets, are about predicting future cash flows, are predicting future opportunities for businesses that you have on the air. So they're all, in a sense, about prediction markets. And that's why I'm so proud what we did. Some of the reforms we put in place is to have better disclosure, yes, on only that which is material to investors, so they can make their own judgments about the future. That's, in essence, a prediction market.
Treasuries, settlements on treasuries. There's been a little bit of a debate about what's happened, obviously, this fall, about what the timeline is going to look like into the future after you're out of this office. What's your take?
Well, our U.S. Treasury market is the base of our capital markets. I'm very proud of what we did, working with Janet Yellen, working with Jay Powell. It was bipartisan reforms that we put in place to build greater resiliency, lower the risk of our U.S. Treasury market, while also promoting more competition, what's called all-to-all trading. So there's forward momentum. There's still things to be implemented over the next 18 months. But I'd note this, our $28 trillion Treasury market is predicted by the Congressional Budget Office to grow to about 35 or 36 trillion in 4 years. It's going to grow 25%. And so we need these reforms to make sure the markets work smoothly and taxpayers can have the confidence their government can borrow in liquid markets that the international community trusts.
Gary, what do you think the biggest risk in the market is today?
Look, I think we have a presidential transition and democracy has spoken, but there's policy uncertainty. There always are around these transitions. Some of those policies will be sorted out over time, but there's policy uncertainties for sure. I have spoken over these last 4 years. There's also pockets of capital markets that have a lot of leverage, a lot of borrowing and low margin. And that's usually in this sort of space between the commercial banks providing leverage to the macro hedge funds in what's called the repo market. And then lastly, I do think that artificial intelligence is transformative, already has affected productivity in a positive way, but there's still risk out there on the horizon.
How much do you think about the shadow banking system in terms of the loan market, which in many ways has moved away from the traditional banks, though there's a connection to the traditional banks?
Look, I think capital markets are best when they're competitive, they're deep, and lots have access. That's what we have promoted at the SEC and the reforms we've done. And so the large private fund market, whether it's private credit, private equity, venture, I think that's been a feature, not a bug of our capital markets. And we benefit as Americans to have large, robust, non-bank provisions of capital.
Okay, Gary, before we let you go, here's the final question. And I asked this of Lena Khan, and I want you to think about the answer. If you could do it again and you could do anything differently, given all of the things that we've just talked about, what would it be?
So you don't want me to just say, come on your show more often, right?
We can do that. We'd love to have you back. And now you'll be
big mistake not coming on more.
Now you'll be
big
untethered completely.
Yeah, big mistake not coming on more.
Look. I would say this, Joe and Becky, Andrew, and your listeners. It is a great privilege to serve. I think that we put in fundamental, important reforms on 3/4 of our capital market, the stock market and the Treasury market, measured $90 trillion total. We put in place key reforms on corporate governance that insiders can't sell their stock in a day, but need to wait the 90 days, but also with regard to that they have to give back compensation that they might have for erroneous profits. I think we settled a really tough thing with China. So I'm really proud of what we did. But we're
nothing,
human. We're not going to get them all
You're an
right.
introspective guy. There's got to be something on the list that you say, you know what, I would have done that. That's the one thing in retrospect I wish I could have gotten to something. No?
Look, I would have liked to have got these Treasury market reforms and equity market reforms finalized, and certainly with the courts, and this is important to your viewers, the courts are shifting dramatically, and I would have definitely wanted to have been able to anticipate all the shifts in the court
Right.
so that we could do things that were survived court challenge a little better.
Gary, I want to thank you for engaging with us over the last 4 years. We hope we're going to get to engage with you a lot more unplugged, if you will, over the next 4, and we look forward to seeing you again very, very
you all
soon.
be well.
Congratulations on your 4 years in the role. We'll see you very soon. Thank you.
Don't go anywhere. More Squawk Pod is right ahead. Welcome back to Squawk Pod.
Stand by, Joe. Here's Mike. Q.
Starbucks is rolling out new changes to its cafes in North America aimed at improving the safety and experience for guests and staff. The company is reversing what is it's been 7 years, a nearly 7-year-old policy that allowed people to linger or use the bathroom regardless of whether they were purchasing something. And, you can imagine what was going on. New code of conduct signs will say that cafes, patios, and restrooms are for customers, those accompanying them, and employees. I mean, it almost became a place to clean up and use the facilities.
That was part of the issue.
People were taking off their clothes and basically
advantage.
showering in the sink and shooting up, and I mean, it's just nobody needs
They wanted to
anything.
be an open and welcoming place. The cafes have always been a place where somebody gets a cup of coffee and maybe stays around and
That was
works
the whole idea
for
of a third place.
Right, it stays around and works for the day. But clearly, when you send out the message that it's open to all and you can use it anytime you want,
It's going to be
We've
abused.
seen there was the naked guy in the Starbucks right across the street here who.
It's a naked guy this morning, right outside, or at least he was naked long enough to do whatever he had to do.
This morning
downstairs.
came in?
Yeah. We have a bathroom right at the entrance. Unfortunately, it's not actually a bathroom, but it's a little alcove.
Thanks.
Yeah.
On the
for
street.
sharing.
Yeah.
That's the podcast for today. Thank you for tuning in. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin, weekday mornings on CNBC at 6 a.m. Eastern. To get the smartest takes and analysis from that TV show right into your ears, all you have to do is follow us here wherever you're listening. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.